Good turnaround Tuesday, Warriors. How's everyone? Michael, James, AJ, Kman, Ryan, team. So, Kurt, how are you? BOJ stands pat. Ryan, Kman, huge move, but what do you think? A sail up here for one more drive for 3 down here as the dollar weakens to take out these lows. So headed maybe towards the targets Blake and I have been talking about. So Ryan, what do you do with U.S. dollar yen here, buddy? Can you guys hear me?
Yeah.
Yeah, got you, mate. Three guesses what I did up near 145.
What's that?
3 guesses what I did up near 145 this morning.
You sold it.
Yeah.
Okay. Yeah, it looks like a good area and an incomplete pattern here. So we should get one more, Ryan. Take out this low.
Yeah, we've just seen a switch. We've just seen a switch. This morning it was all about the yen and the yen weakness lifted up, dollar yen lifted up all the yen pairs, and that supported the majors. Now we're just switching to the dollar side as you guys come to town. 10-year yields looking a bit iffy, not much of a bounce off that 389.90 level, and it's heading back that way. So now the dollar's weakness is kicking in a bit more now.
Yes, and Aussie making new highs, and cable looks better, and the weakness is, but euro looks okay. I mean, we're probably going to take this out. I saw some monthly resistance here in euro. Right up here is this moving average, 111-ish, nice. 111 and a half. And it wouldn't take out this high of, I think it was 112 right here. So, yeah, 112.75. That looks pretty good.
Good telescope, mate. Good telescope.
And pound, same type of thing. Up here around near 29. Maybe we go to 30. And then Aussie. Look at that. Moving average is 70. And on the weekly, it's 69. So between those two, oh, look, it's 70 here. Maybe it was a daily. Anyway, I was looking for 790 at least. So see what happens here. Yeah. So weak dollar, metals are getting a bid. How are you today, Kman? You doing anything?
Hey, good morning, Dale. Good morning, everybody. I am, well, a bit, it's rangy right now, but I'm keeping just a couple of smaller euro crosses short. Yeah, I traded just the morning a little bit on the yen, but as I said on the flow show as well, and in the room, this 144.60 up to 145.15 is a very, very decent area on the dollar yen.
Yeah.
And it stopped right, well, towards the top end of it. We ended up sending us over to next year. So that's keeping the yen crosses relatively bid since the decision, of course. But as Ryan says, the dollar side is also doing its bit there. So it's that 144.60, 145.15 is the area where it stopped, and that is looking pretty okay for the technical side of things. On
the Juan's not following it. The bounce is feeble compared to the yen.
Yeah, exactly. I mean that those two. I'm not very. I don't like to look at the correlation, to be honest.
Okay. Well, that's
a lot has been broken since the pandemic, since the nearshoring, since the Chinese. They have different issues than what the Japanese have now, and even though there's some similarities in what their central banks and governments are doing, I'm not really looking at the correlation too much right now. for what China and yen is concerned. Now, what is interesting though is that yeah, sterling is behaving quite well. This morning I was talking about it 126.30 on the cable. Has retested this a little bit this yesterday afternoon, and I think there's been quite a bit of nervosity around the Suez Canal issue, and
Yeah.
that has put a bit of pressure on some of those currencies yesterday afternoon, but they are all well, most of them taking it back right now, or at least parts of it. So yeah, that is something that I'm keeping an eye on. You never know, but it looks as if the shipment companies and others are starting to find ways around it, although it's going to be much more expensive than taking direct route, of course.
Now, I wanted to ask you, since all of your experience in Asia, although I know most of it was Japan, that in the Great Recession, when we were weak and having all kinds of bailouts, China was still in gear, and basically their growth helped pull the rest of the world out of the Great Recession. It was a help. And so I was always thinking, well, I have been thinking for a while that their weakness, which, here's the FXI, we're not, it's either screaming buy here or we're going to take out the October 22 lows. If China continues to deteriorate and have problems, could it be now that they're a much larger part of the global economy than they were in 2008? That if they catch a cold, the rest of the world could catch pneumonia?
Well, I think this is partially true, but we've also heard over the last year and a half this nearshoring,
Yeah,
trying to de-risk from China, and I've read an interesting article that they are still doing a lot of commerce, obviously, but a lot of foreign companies are or foreign importers of Chinese goods are asking actually the Chinese to pay up for inflation now, and they're permanently asking for discounts on already what I would suspect discounted items, cheaper items. So um, I'm not sure whether it's going to
yeah.
be a pneumonia problem
Okay.
just because of these friendshoring, nearshoring, trying to find other ways.
Yeah, Mexico is benefiting greatly from that nearshoring.
Yeah, absolutely. And if we look at what's happening in the Mexican peso, for instance, you have those moments. Since September, something changed in Mexico. Of course, we know what a Banxico was doing, and then we had several rounds of stress. But if you look at it overall, the Mexican peso is still doing relatively okay. If you look at
Yeah,
Mexican peso versus the world, it's been quite a couple of years for the Mexican peso,
yeah,
and we are not really. Yes, we are above the lows that we've seen in dollar mix, for instance. We are
right.
below the highs that we've seen in Mex yen, for instance. But if you look at the last couple of years, I was looking at a chart, I think a couple of days ago or last week or so, and if you look at it since the pandemic, Mex yen has not even retraced 23.6%. So the long-term funding and carry trade helped by friendshoring and the Mex being close to the US is probably still very much
Yeah,
working. It could be different in 2024 because Banxico as indicated, they may start to change their interest rate policy as well, starting to cut rates, but you will still be looking at it. They are 11.25% now. You will still be looking at a 10 or a 9% currency where other majors are going to cut as well. So the difference will still be made on how economics are going to develop. If the world isn't collapsing, I reckon that perhaps the mix is less, but will still be perhaps one of the currencies to be in for 2024. Let's see what's happening.
Okay, I want to ask both you and Ryan, since we're already thinking 2024 and it is an election year, what does it look like in the U.S. With the 2024 election coming up? What are Europeans talking about with most likely being a rematch between Trump and Biden?
I don't think there's too much being spoken about it just yet. Obviously, that's going to pick up next year. I think for us sitting over here, it's a question, and in a market sense, it's a question of what's it going to mean? Biden has got obviously his age issues. Trump went out with a fireworks when he left office, and he's potentially going to come back. Is the market going to take kindly to that, or is it going to expect another roller coaster show? In effect, TV presidency, like a TV show more than an actual political show. Yeah. So I think that's going to be the focus for a lot of the market, and for us over here watching from the outside in. If Biden gets replaced by someone who's more, younger to be for a start, and someone who's a bit more, got a bit more about them, then that may be a bit settling for the markets and swing it through. But I want to ask you, Dale, how do you see it in the early doors? Is Biden a shoe-in again, or is Trump a real possibility?
He's a real possibility. And I think that which way the market is going right now, and I've actually heard that there was pressure on the Fed to do what they've done recently to sound more dovish, because so Biden could have something to talk about, these stock market gains too. But it's the wrong time. It's going to be more important not where the market is now, but late summer.
Yeah.
If we blow off in the first quarter and we're selling off into the summer, fall, it'll look better for the the Republicans rather than the incumbent. So
I saw a story that Biden's approval rating is at the lowest for a long while because of economic worries. This is from your country who's just posted 5.2% growth. Strong jobs market. Where's the economic worries coming from? It's ground level, not reflecting the data.
Well, there's more homelessness because rents have gone up 20-30%. Yeah. And I think that, prices for middle class people, everything's higher. So I think it's more the cost of living that people are upset with, that they, are struggling with the cost of living, especially if they haven't been getting pay raises like unions and so forth. If you're making the same amount of money you were making, 3 years ago, you're being squeezed.
Yeah, so the sentiment on the ground is at odds with the data that we see.
Yeah, they could care less about, record highs in the S&Ps. Maybe they have an IRA or something like that, but just a day, a lot of people day to day, I think there's stats that, there are a lot of Americans that are paycheck away from, being evicted. So, there's not a lot of savings I know they talk about the consumer and how strong they are, but there are a lot of people in this country struggling, and therefore, nationalist policies are appealing, right?
Yeah.
I'll fix everything, like Paul. Anyway, I wanted to ask you about you guys. Canada. It's really it can't rally. There's a pretty ugly month that we have, but for the last couple of weeks, I keep saying, God, is it weak? God, is it weak? Now I think that if we could get a rally back to 35, that'd be a nice little short. I don't know if we're going to get there, but that's where I would do it. Up there. And we have Adam on today, I believe, Adam Button, because that'll be good, because Adam, I think he was bullish USD CAD the last time we were on. So Adam, if you're out there, I'm gonna grill you today, buddy.
Well,
Anyway,
Macklin pulled another 180, didn't he? Was it
yeah,
Friday? Friday he said we're not even discussing rate cuts, and then yesterday he came out and said, "Oh, we're probably going to cut in 2024." So he's been flipping around like he was with monetary policy a few months
yeah.
ago.
These guys are guessing like we are scalping.
Kman said exactly that. They have no better idea than we do, and they're supposed to be in charge.
Yeah. Okay. So let's bring the boss in. Blake, what are you doing today?
Well, like Ryan, I was and good morning, guys. I was joining the band of troops in the ForexAnalytix community of selling dollar yen when it was up at round 145. I got up this morning and I was like, "Hey, we're there." I honestly, I thought we were going to get up there at some point. I didn't expect for us to get there when I woke up, and it's a level that we've all been discussing over the last 24 hours. Like, it's just the top of the range. You know, if you could get up to 145, it's a short, and we got up there, and I think most of us took advantage of it. So
Good.
so yeah, it was great. So now we're just sitting in it, and I know Ryan, you've been scalping out of some of it, but I'm sitting here looking at it, feeling a little greedy for Christmas right now.
Yeah, why not? You can play.
You have
with
a view on gold.
it.
You have a view on gold, Blake?
No, none. I think we're in a range. I think you sell it at 250 and you buy it at 19 something or rather. I have to go. I'll pull up the charts right now.
Okay.
But yeah, I just would be playing the range. There, like if you look at the I'll just pull up silver really quick. Silver's a much better range, and I have it highlighted as such. Whoops. There's silver. That's the range right there. Gold is also stuck between all of these levels. So 2000, 2010, and 2050. Give me one of those levels, and I think you sell the fringes of it. So that's it.
Okay. That's
yeah. And no, Ryan, what were you saying about the dollar yen? I mean, this is I'm gonna just explain to you guys what we've been looking at. It doesn't matter how you dress up this channel. This is the underside of a broken channel, and that blue line was the descending trend line that we've had since we hit those highs. So and the 618 retracement is at 144.50. So as our analysis, if you read it overnight, is just, we get to 145. It's just selling up there makes a lot of sense. So Brian, what are you going to do with your dollar yen here?
Yeah, well, I was just saying to you, if you're feeling greedy and you don't want to take anything off because FIFO rules mean you've got to close it all, then just manage it with your stop behind. Just drag your stops down and keep locking it in further and further in profit until you either decide to get out or you get stopped. But you're going to be looking in the profit with your stop running behind it.
Yeah, for us, and we have to trade with FIFO, and first in, first out, and I got to trade a core position here as an American. It's just kind of the way that our rules are. It's like, well, just sit in it. But it's like I expect us to trade between a 140 and 145 range. But you can see last night's analysis, it's like, okay, inaction of the BOJ, it's going to get us to 145. And Kman, that's exactly what we got last night, right? Like literally nothing.
Absolutely. I've actually missed it by a hair, the Bank of Japan, which is stupid because I had an entry just above market and I took it out and then went to sleep and everything, and I would have made it more money, but I've played it slightly to the other side, but just because those yen crosses are so big. But yeah, it's exactly there, 145, 144.60, still that 50% at play. There's the top of the 4-hourly cloud comes in just above 145. There's a lot going on in that area, and it really deserves respect. That's for sure. And then you look at the rest of the dollars, of course, who are starting to suffer, and US yields are coming off a little bit as we speak. It could be, and we talked a lot about or we talked what we expect for the end of the year, it just does look like the dollar may have a bit of a tough end of year, and which will have to do with all those equity moves that we saw this year as well. And on the other side, risks should perform pretty okay, I would say. That's
Yeah, you know, this euro, I mean, I think we're, you know, developing a triangle this week. I drew this out yesterday, and we were brushing up against the top of it and hit the 618. But I think this is looking more like a, you know, like a cup and handle pattern development that is going to eventually break out. So I think leaning into the dollar on the short side going into the end of the year, especially with stocks up here. I mean, I don't know if you guys seen it. I mean, Dale, NASDAQ 100's at all-time highs. Yeah, I mean, look at the triple Qs here. I mean, that is, I mean, that's the NASDAQ. I mean, it's just, yeah, I mean, like, why stand in the way, right? I mean, now there's a chance we could stop here at resistance. I mean, we have the S&P. It would put us up at you know, shy of a new all-time high. We're at 127% extension. We've been brushing up against that since Friday. You can see it here.
Oh yeah, 47,
yeah, we
46.
just been, yeah, at this 47.50 level. We just been like nudging up against it since the end of the week last week. And I mean, we're trying to push higher, but yeah, I don't know. But I have to say that the NASDAQ 100 is at resistance. But, you know, markets always look most bullish when you're trading at resistance, right? And that's that's a true statement. So we'll have to just see what happens over the next couple of days. I wanted to ask, go ahead.
Yeah, have you seen the S&P? It's at the 127% of the what is it, the July October decline?
Yeah, we're looking at it right now. Yeah,
Right.
it's been there.
Yeah.
It's right here. Yeah, it's been there since Friday. It's that was a Friday. We hit it on Friday, and it's held us, and now we're slightly above it. So, you know, it's like, do you chase it up here with the NASDAQ 100 at all-time highs? That's you know, that's really the trick, right? And I don't know. I wouldn't stand in the way. Let's just put it that way. You know, there's, you know, I wouldn't stand in the way. I'd have to see it dip back below 4,700 right here in order for me to think maybe it's over. And then, you know, if that happens, then you would know exactly what your risk is on like short NASDAQ. You know, it's at the highs. So anyway, I think it's worth noting. You know, am I, you know, if do I have the stomach to do anything
the VIX
here?
is not making new lows with this. Like, I tell you
It's
what,
not,
that
yeah.
I just have a feeling there's a Lazarus in here. Which, if people don't know who Lazarus is, he was raised from the dead. So could be a Lazarus trade down here.
I guess, you know, are you willing to take that type of risk going into the end of the year, knowing the seasonal, you know, issues that we're dealing with, and knowing that people might just continue to plow in at the end of the year, no matter what?
Yeah.
You know,
do you think it's all these expiries we keep getting? It seems like every quad witch and triple witch is bigger and bigger and bigger and bigger. Is that putting so much pressure on the VIX, do you think?
I mean,
I tell you what, you
ahead,
saved that question for Thursday, because Jim Carroll coming in, and his handle's VIXologist.
Yeah,
not proctologist, VIXologist. All right.
Yeah. All right.
The other
well,
questions.
I'll save it for then.
All right. So, you know,
anyway.
let's wait. Today, do we have any data coming out? Real quick, let me.
Yeah, it's Canadian CPI.
We have Canadian CPI. So we do. Let's go take a look. Let's take a look at this dollar CAD. The dollar CAD actually has been, I mean, it's been trading so heavy. And Dale, I know you said you're going to hound Adam Button about
Yeah.
his
Bullish USD CAD call.
yeah, but it has been trading heavy, and I think a lot of it has been just I think it played a little bit of catch up with like a lot of the other dollar pairs. Looking at it technically, though, one of the issues that I have with it, it's just it can't you know it can't
Rally.
gain a bid. Now, and then the problem is if crude, which I think crude's going to rally from current levels, that might just give the Canadian another kick and maybe get us back below the 133 level. I think this is like the next place to be looking at the dollar CAD. But you can see this is like a bear flag that's developing intraday.
32-ish. Yeah.
Yeah, I mean this is very bear flaggy right now. So any strong Canadian data should push us down towards 133. Ryan, do you have any thoughts about the dollar CAD?
Yeah, you've got to be careful here after the Macklin flip overnight. So if we get a real soft reading, less than expectation, then the market might start pricing cuts more aggressively, shall we say, for Canada. But if it's a hot one, well, then we see a bit of CAD strength because then that keeps the hikes on the table. So yeah, a bit of a coin flip for this one.
I'm curious, and you guys live in the UK as well, and tell us about your mortgage issues that are front and center over the next couple of years. I mean, how often do you guys have to refinance your mortgages typically?
Usually you get deals 2, 5, and 10 years normally. You can get shorter, like a yearly, but it depends. This has been bubbling under the surface that there's going to be a big mortgage crunch, a lot of 2-year deals coming up next year, and people are going to be having to remortgage onto higher rates. I think it's one of those things where, yeah, everyone talks about the worries, but it's not a one-day thing. Not everyone switches on the same day.
Of course.
And it's one of those things we just have to keep in the back of our minds to pay attention to if we start getting headlines on it. But
I'm gonna assume Canada is the same way. I mean, maybe not in length and duration, but something.
I don't know.
They are.
I don't know what those guys. I mean, they've had their own property value problems, haven't they? What was going over there in the last few years? Property prices going through the roof, forcing the government to step in, weren't they? So, yeah, it's always a crazy horse over there.
Right. Well, I guess, Dale, you can ask Adam about that. I think that's going to be an interesting topic of discussion going into this next year. But Tulin asked thoughts about silver. Just if you stepped in a little bit late, silver, I think, is in a range. You can see we're smack dab in the middle of the range, 2330, 2460. Silver or gold is very similar. 2010 is the previous breakout point. 2050 is resistance. 2000 below 2000. If I was long gold, I wouldn't want to be long gold anymore. I just don't think that's going to be an issue with the dollar weakness that we're seeing. But that's personal thing. I think gold's probably going to trade back up towards 2050 or 2080, with in tandem with dollar weakness as it comes. And by the way, guys, if you missed dollar yen at 140, 145 today, I think you got to watch it by the end of the day. If the dollar yen ends up giving all this back, from the overnight BOJ's inaction, we'll probably trade back below 142. I would think by the end of the week. I think the dollar is on weak footing, and it looks fairly weak with this big cup and handle pattern developing, and we can't even get above the 38% retracement. So because we can't get above the 38% retracement, the risk is that you have a continuation. In this case, would be lower. If you have a move like that and then it can't bounce, then chances are we're going to be continuing that move lower at some point. And with stocks as strong as they are, that makes a lot of sense to me. So we got Canadian data coming out. Let's go ahead and pull up the dollar CAD. Kman, I don't think I heard from you about CAD. Do you have any opinions here?
No, it's a dollar move. I think this dollar CAD, my friend. Because on the rest, when I look across, Canada has strengthened somewhat, but really very, very little compared to other currencies. Yen taking a part, of course, because we have the BOJ or so. But versus the rest, it hasn't really gained. So Yeah, I don't have much of a view on the Canada, but I do think dollar CAD could print a low just because the dollar is on the weak
Yeah,
foot.
well, stronger CPI just now. So that is
Yeah.
putting the dollar CAD lower. So there it is. So
Yeah.
it looks strong and for good reason. I mean, you look at that bear flag pattern, looks like it does want to play out. I think 133 seems very logical at this point. Like I said, especially with Canadian strength, dollar weakness seems possible.
Starts and permits solid as well. Housing starts in the US pretty solid, so that's okay. More soft landing numbers.
Oh, building permits, housing starts. Well, you know, if you're a home builder and you know there, I mean, I live in one of those markets where there is homes going up everywhere, you know, just people are just, you know, these home builders are just clamoring to get, you know, housing out there to get supply out there. So it's makes sense. What's going to be really interesting is the existing home sales later this week. I expect those to continue to be very, very soft. So, all right, guys. Well, Dale, thanks for guiding us as always. Ryan, Kman, this was your last flow show today, right?
Yeah, that's it. We're off. Thank you very much. Happy Christmas. Up time.
Well, you're gonna have Christmas. You got like what a 4-week Christmas? I mean, what the hell?
Yeah, well, we work so hard, like, you know, we need we got to get back to you know, making toys for Santa. You know, that's our second job.
Well, don't forget, guys, here on the F.A.C.E show, we're going to be broadcasting because Steve will be definitely making sure that the show goes on. But Dale and I might actually be able to sleep in a couple of days over the holiday season. But if you listen here normally to the F.A.C.E show, make sure you're tuned in throughout the course of the week. We'll be here. So,
well, Ryan and Kay, if I don't talk to you guys, have Merry Christmas.
Oh, we'll see you tomorrow, mate. Yeah, we'll see you tomorrow.
Oh, okay.
Yeah, they're just gonna come here and lollygag in, Dale.
Yeah,
While we're scraping ourselves off the bed at 4 in the morning.
Yeah, we bring booze and snacks. Don't worry about that, Dale.
Looks okay. Sounds good, guys. Dream Team, thank you very much.
Thank you.
Adam, my trading warrior brother, how are you, buddy?
I don't see him yet. I tried to promote him, but I don't see him.
I see him.
Oh, there he is.
Oh,
have a good show.
Oh, he wasn't promoted. Okay.
I'm gonna try to do it right now.
Hey, how are you, Adam?
Can you hear me?
Oh, there it is.
Yeah, got you now.
By the way, we've got some Zoom issues this morning. We've been dealing with them. It's definitely a Zoom issue. So Adam, welcome, and I'm cutting off now.
All right.
Okay, you're rejoining now. There you are, Adam. Okay. So how you doing, Adam? Thanks for being here. I know you probably had to cover that Canadian CPI, so you had a little crunch time when we made this day. We probably didn't know the Canadian CPI would be at the time.
Well, hey, listen, buddy, the whole financial world stops for Canadian CPI, and you know, a little bit on the hot side there. So Tiff Macklem is trying to keep to his hawkish chops, and certainly
for today, the guys does more flips than hamburgers. Right?
Well, you know, I don't have a lot of positive things to say about him. I'm sure he's a nice guy, but professionally, he's missed the mark pretty much all the way along.
You know, we were talking about this, Adam. It seems like central bankers everywhere, they don't instill a lot of confidence. I don't care what country they are from. It feels like they don't know any more than we do.
Well, yeah, and you know what? The one thing we do know that they don't seem to know in most of the world is that they're just going to follow the Fed. I mean, you see this pivot from the Fed, and then you have Lagarde, who has a terrible economy, plunging inflation, trying to say that they are not even thinking about hiking at all when Powell's already opened the door. And I just don't get that. Like it's like we know what they're going to do before they are, and it's going to be the same in Canada. And so, you know, we'll see. I mean, 1 month of hotter inflation, though, might kind of mix the messaging up here a little bit into January. So
I think they should strongly consider getting you to head the Central Bank of Canada.
Listen, buddy, I got them together. We're gonna do a letter writing campaign, I think, here.
All right, and I do want to start with Canada too, because you're a USD CAD bull. Last time we got
Yeah.
together, and I know that's 3 months ago, and things can change in 24 hours. Has your view changed, because it doesn't seem to be able to catch much of a bid since it peaked at about 139?
139. Yeah, it got up there, it got moving. And so what we had, there's been a big shift in the US dollar, right? Right across the world. And that's been the driver, not so much the CAD side. When I look at the state of the global economy and watching the data, there's a lot of stumbling. Europe is stumbling. Canada is starting to turn, maybe not as fast as I thought it would. Canadian housing is definitely buckled. I mean, there's this situation right now where there's no supply coming on, and sellers can't move homes when they sell, and there are no buyers at all. And then so sellers are just kind of giving up and taking down listings. But in the springtime, and especially if the Bank of Canada keeps rates where they are now, then we'll see it come apart, and we will see the Canadian dollar underperform in a big way. So the longer they kind of hang on to this hawkish stance, the more they're going to have to cut later. And what might save it is if they pivot, and we see we are seeing market rates come down, so there is a little bit of relief there, but it's not going to be nearly enough.
Well, it seems like the commodity currencies are outperforming the European currencies, most other currencies. Do you think it's because there's an underlying bid in commodities? Could it be that China might be recovering? I look at the FXI, it doesn't look good to me. And I know you've always worried about what could happen in China. We were talking about that this morning. Do you think that their problems are going to deepen next year, and that the globe feels the effects this year this coming year more than this year?
Yeah, well, I don't really see it deepening. I mean, they have so much optionality around stimulus, and they're just trying to flush out the property market. And I know they don't want to add more debt, but they have zero inflation in China right now, negative inflation on the year over year.
Right.
And then they'd be feeling some of the inflationary impacts of commodity prices in the last number of months as well. So they have that, and I think that's an upside risk for something like the Australian dollar, which I think is going to do well next year. And it could bring along a lot of other things with it. The oil's got its kind of own market right now with OPEC, so China shifting gears maybe adds 1 million barrels a day of demand, but there's certainly the supply there to match it. So I don't know if that kind of China commodity currency complex really goes beyond the Australian dollar. But that's kind of the way I see it shaping up.
Chart looks great on the Aussie.
Well, you wonder how washed out sentiment is on China, because you look at some of the Chinese equities, and it's unbelievable how cheap they are, and they just keep falling.
Yeah.
And so
the FXI, BABA, just a few things that I keep an eye on, and we could take a look. But China under pressure, that to me, I think that if they have problems, it's hard, they could pull us out of a recession. Why can't they pull us into one?
Well, I mean, it's fair enough. I mean, it's not. I mean, over time, if you have a kind of weak economy, I think problems build up, and it must be building up below the surface in China. I mean, it has just been such a tough one to call, because you kind of take that playbook from elsewhere, and anywhere else would be easing in some kind of way right now. But China has its own sort of plan here right now.
Yeah, so there's BABA, and here's the FXI. So while we're the Nasdaq's made a new all-time high. Look at this. So I mean, it can threaten the October 22 lows. If we ever had a correction here in the U.S., I don't see people just rotating into China. We might even go for these lows. I just
Right.
can't see that being positive for global growth. What's happening in China.
Well, especially if you layer it on with Europe, which will be lucky to grow at all in 2024 again.
Okay, I'm glad you segued there because you were talking about all the negative fundamentals in Europe, and all the data has borne it out. But do you think that? And you said, why would I want to be long Europe, be long euro? Is that shifting for you a little bit as
I
we
mean, not at
start
all.
pushing up?
I think there's only two trades in Europe, and it's short and on the sidelines. They're just not any sort of dynamism, right? They're like the AI, North American invention, right? Entirely.
Yeah.
And the first contribution that Europe made to it, and they were patting themselves on the back in a Twitter post the other day, was we're the first region in the world to regulate it. And you think, well, that's just Europe, isn't it? At some point you need something to invest in beside, okay, yeah, the PEs got really cheap. I mean, the DAX sort of blew up.
The DAX
Europe, energy has obviously been what it's been. The weather's been great. If this cold stretch was in Europe instead of Beijing, things might look a little different today. But I mean, it's a pretty dead cat balance as far as I'm concerned.
Are you worried about maybe supply chain issues with WTI, with what's happening in the Red Sea?
There's a lot of pieces on that chessboard in trying to figure out who wants what to happen. The Saudis and the Houthis seem to be trying to make a peace there. They're treating this as sort of a piracy issue.
Said is Houthi, they just sending missiles, and on the side it says peace on earth, goodwill towards men.
Well,
on the drones.
I mean, I don't know about you, but I'm a little shocked that America didn't drop a few bombs anyway. So
yeah,
I don't know if they think they can sort this out with this operation. I forget what it's called. They announced there yesterday.
Yeah,
it's like 32 nations trying to get involved together, which is I like the look of that, at least, because every nation in the world doesn't want this area blocked.
yeah.
But can they really, block it? I mean, I guess they'll try this as probably plan A. I'm sure there's a plan B and a plan C, but I'm a little worried right now.
And you know what else is interesting? I was reading yesterday that because of the immigration crisis we have here in the U.S. at the southern border, they had to shut down a couple of railway points. And the railroad guys are saying, we understand this is an emergency, but it's going to screw up the supply chain.
Well, the lesson of COVID was really how fragile the supply chains are. And I don't know if anyone's done anything to fix that. You look at, maybe inventories are running a little fatter than they did. But that's always tough to read through in aggregate data. You would hope at the micro level, the companies are running a little fatter on inventories, but instead of 2 days of inventories, it might be 3, which isn't much of a cushion. So yeah, that fragility certainly hasn't been solved, nor in the financial system. I mean, remember what happened to treasuries during at the start of COVID, when treasuries you'd think they would have been rallying, and they imploded, and and all these basis trades, and they've the Fed kind of fretted about it for a little bit, wrote a couple reports, and nothing's changed. The leverage, it's just getting piled on again.
All right. Well, we have a huge rally in the bonds over the past couple months, in equities and bonds, since you and I talked. Do you think that this is just a short covering or a short squeeze in bonds, or does this move have staying power?
Well, we look at you look at the Fed pricing right now, 141 basis points, which seems a little rich. They're saying 75. I mean, the market's always ahead of the Fed, so maybe it's 125 in the end, or 100. So that seems a little much. But what I think more about is sort of the regime that we're in. Are we in a low inflation regime again, or are we in a kind of 1970s sticky inflation regime, the kind of thing we were worried about?
I'll go with B. How about you?
It wouldn't be your first time there, you remember. So
I I was only two. I was two. I'm kidding. I'm kidding. I was driving.
Yeah.
Driving badly.
I,
So yeah,
I
okay.
think, the market is telling you pretty strongly now that we're kind of in a 2010s regime again. Low inflation, wages aren't running too away here. You've got all this disinflation in the pipeline from rents, from cars. I do worry about commodities and energy kind of coming back around, but probably not in 2024 too much. So I think the market is, and I think that is important. I think that's the call you have to make in the big macro picture. And I would say that the bond market has it right here, which is good for the equities, and certainly equities in the next 2 weeks. You can't fade a Santa Claus rally.
Santa Claus. It started Halloween.
Well, it was
a Halloween
Christmas
rally.
does seem to start right after Halloween now.
I guess, yeah, they are selling merchandise then. So I've talked to guys that say we've entered a parabolic stage in this market. And the first quarter, there's nothing to stop it from trading 6,000 S&Ps. Do you think that?
I mean, that's a bold call. What I think.
Well, he also said maybe 7, but I didn't want to.
Well, 6 at the minimum, 7 at the max.
Anyway, yeah.
Well, where I come down is you have like the Magnificent Seven, right? And you do get a lot of this rotation trade. For instance, say you own Facebook up, I think it's up 100% this year, Meta. And, you don't want to own it anymore because the PE is sort of back to like max. All the Magnificent Sevens, like they're pretty much at max PE that they, been historically. But are you going to sell it right now? Well, the reason you wouldn't sell it right now is you have a huge tax bill in April on the capital gains. So you wait until January 1st, or you wait until, T+2, so the 30th or 29th. And I think that is my worry early in the year, is that we see this mega cap tech get sold, probably rotated into something else.
Cheaper into the Russell.
Into the value, which I like a lot. And I've been on here and I've talked about steel before, Dale, a fair bit. And that was a pretty Merry Christmas present for that US Steel deal yesterday. And I think it validates a lot of the value that is there in industrials. It was trading at what, 17 a month before the takeout and sold at 55. So they're certainly not the only ones. I mean, there's a bit of an industrial policy thing going on there in the US. A lot of factory building on chips and IRA and infrastructure. But I think that rotation trade is more of a straightforward one to me than saying things are going to moon. And there's a lot of value in different parts of the world. So
and it'd be a great funding source for people. You're selling expensive stocks, you're raising cash, and you're buying, value, or, even the regional banks have recovered.
Well, that would be one where it could probably make its way into. I mean, Bill Gross has called a pretty good game on that out in California.
The regionals?
Yeah, he was even naming names there probably right at the end of October.
Huh. Okay. Bill Gross still has it then.
He's got it back, and he's been relaxing for a couple of years. And
well, he's been fighting with his neighbor, and they've been suing each other.
That was the last I heard of him.
Maybe it's settled. But you know what? I would be careful with the regionals here. Look at this.
Like it's run, right? It's run.
Yeah, it's run.
But if they're pretty beaten up. Like if the other I think the value can run, Dale. You look at home builders. I mean, record highs. I know you were talking about home building before. And the margins are unbelievable right now because prices are higher. Like lumber's come way back down. I mean, they were barking a lot about that. And I think it'll go back up. But right now, the margins are great. People want because they can get a buy down into the 4% mortgage here now in the US for 3 years or whatever the home builder offers. And there's no supply coming from the and if you do sell your home, it gets sold to a corporation. So there's no single family supply. Copper's interesting.
Yeah, I know you're a long-term copper bull. So I mean, it looked like it was breaking down, that was before the market turned, but sure looks pretty good now. That kind of builds a case for Aussie and maybe a China recovery.
Well, it's
think?
two things, right? I don't know if you saw the story in Panama. So it's like 1.4%
Oh, yeah.
of global supply. And that's this Cobre Panama mine, and it's gone. Like the Panama just decided to shut it down, which is they may
What's
come
going
back.
on with what's going on with these land grabs makes you kind of nervous to buy any kind of mining company. They put in billions of dollars. And I talked to a guy who lives in Panama in the mountains. You know, James Henry
I've
Anderson.
heard the name, yeah.
All right. And he was surprised, but he talked about, you know, investing in miners. You really have to be careful because mines are developed and then governments repo them or tax them a lot.
Yeah, that's happening, and it was, you know, for all resource extraction really, and it puts these really low multiples on anybody in the space really, and especially anyone in like Latin America or Africa or honestly anywhere it seems now is fair game. And it's going to curb supply. I mean, right now everybody knows there's going to be a lack of copper come about 2026, and the trade is like, how long are you willing to wait for what could be copper going to say 12 or 10? And the leverage on a miner on going from 4 to, like, you know, a copper miner right now might be making like 50 cents a pound. So if you go to 10, I mean, it's all profit, right? So now you're making $5.50 a pound. So it's easily 10x. And it's how long you're willing to wait for that. Now that mine in Panama getting shut down obviously brings that a little bit closer, and also takes a lot of the supply out of the pipeline. That might have been sort of like, I think a lot of people don't understand how long it takes to bring a mine to production, to find the resource, the permitting. I mean, it is the most difficult permitting process in like anything. It's a good 10 years at best.
Yeah.
At best, Dale, 15 is kind of your baseline. So once there's a shortage, like you can substitute some aluminum, but nobody's substituting aluminum to like 10. It's not like copper is that big a part of the construction equation.
Okay. Well, there's a couple of copper issues. There's Freeport, and here's the ETF on copper. Looks okay.
I mean, and then you say like China, obviously China is a drag on it. India, though, is a pull. I mean, India is it's doing better and better. So I like it, and it's just really a timing issue. And my philosophy would rather be at least a little bit early. And we'll wait for the signals when it's really going to go. But if China starts, you know, hitting the gas pedal on stimulus, then I mean that's a really good spot to go on day one of that.
So I remember when we talked, you said to buy gold in I think it was either late November or early December, and we did have this low here in December on the 11th of December. So
I mean, it's holding up pretty good, right? Like that was, I mean, you had a record high on I mean, for a few hours there. And then it come back, and now you've got the Fed telling you to buy gold. You've got the seasonal trade, you've got the dollar kind of weakening off. The dollar can easily weaken through January or into February when the seasonal trade runs. And then, you know, maybe it gets its own momentum. You see the numbers coming out of China on demand, they're good. You know, there's the rest of the central banks are going to pivot. I don't see what's not to like about gold right now. I mean, you just got to get through 2100, right? You just got to get through it, and then it'll go.
And silver?
Same story. I mean, I'm not
more like copper or more like a monetary metal, like gold.
Well, it does have a little bit of that industrial side, right? The solar panels and and it, you know, I am. That's sort of the thing. Like, I never really know what silver is. It wants to be industrial sometimes. It wants to be gold. It wants to be the gold silver ratio, but central banks don't really buy silver. So
yeah, this is a multiple personality disorder.
That's right.
So here's something that may have changed late this year. US dollar yen, I know we're getting a nice bounce here. Some of the guys were selling it against 45 today. It looks as if we take out 140, we could have a pretty big fall.
Well, I'm having a
in
hard time
US
getting a read
dollars.
on the Bank of Japan.
Yeah.
You know, Ueda now, this is, I don't know how many months he's been in there. There's a lot of, you know, BS leaks come out of there right now. Mixed signals. I mean, he was throwing it out at the start of the month. There's going to be pain around the end of the year. And then everybody ran with that. And then they walked
Yeah.
it back as hard as they could. And today they did nothing. You know,
Yeah.
I think the problem, like, and when I look at it, they have to exit this policy at some point. And
Right.
you oftentimes, you either exit it when you have to or when you can. And right now they can, right? You have bond yields falling. So you can, they could get out of this. And alternatively, maybe we do get a kick up in inflation and then they have to do it when they have to do it. And that can be disorderly. So for me, you'd want to get away from this sooner rather than later while the market is giving you a little bit of latitude to exit. But it's just a tough one to read. And now you have some disinflation kind of globally. Even the yen has come back, so that maybe adds a little bit as well. So maybe they just let it run. They're just scarred from low inflation, which doesn't seem like the world's biggest problem to me.
Okay, so why don't we wrap it with best idea and biggest surprise in 2024?
All right, best I like the Australian dollar. I mean, the housing market there is holding up better than elsewhere. The central bank is a bit of a mess. I mean, even they're predicting back to the top end of their inflation range in 2025.
Okay.
And that to me is not a bank that needs to cut, especially, you know, when you see what happens with housing. I am a little optimistic on China, either this year or, you know, the market will start to see it later in the year. Sorry, either next year or late next year. And I think there's, you know, it's low from where it's been. You know, there are some risks around there, but I like that. I think the biggest surprise is that the dollar does pretty well, the US dollar. I mean, the economy in the US is still, it's the best of the best. And right now the market is kind of listening to these central bankers and saying, you know, and then another surprise I think is U.S. housing is going to boom. I've been saying that for a while.
For a long time.
I mean, my conviction is only strengthened. It really is. It's come through this. Home builders at all-time highs. You know, there's barely a hiccup aside from a few markets, and you know the supply issue isn't going to fix itself.
Okay, my biggest surprise, even though you didn't ask me, is that this is not the high in 10-year yields, and that we hold between here and 350, and we make another run mid-year when Powell has to do what we talked about other Fed officials had to do in the 70s, and we're going to make new highs in yields next year.
Well, that would be a booming economy. That would be for sure.
Or unless it's just a supply
really
issue.
See that much below 390, even where now I don't even know if we get to 360. Just because, you know, you got to get to 3. I mean, you got to roll the front end for a while. You still get 5.4 in T-bills. I mean, 3.9 isn't that attractive.
Yeah, that's true.
So,
yeah, good point.
I mean, where's the Fed forecasting now? End of 2025 at 3%. So, you mean you're going to want to be 2 years early? Just to pick that up?
In the year 2025, if man is still alive. Anyway, it was 25. Adam, Merry Christmas, bro.
Well, Merry Christmas. We've got a white Christmas. It snowed overnight here. So
and a happy new year. And I look forward to talking to you again in 2024. And my hope for you is it's your best year ever, not just in the markets, but in every way.
Dale, you know, you have a great way with words. Thank you very much. And, you know, thanks to the community here and you know, I'm thankful for so many things this year. Trying to stay optimistic, so it should be a good one.
All right. Well, help me with that, will you? Anyway, thanks, Adam. Adam Button, everyone. You could follow him on Forex Live and on Twitter at FX_button. One of the best news traders out there. So always great talking to you, and thanks for your views, bro. Appreciate it.
All right. Well, thanks so much, everyone. Take care.
All
Merry
right.
Christmas. Happy New Year.
Adam Button, everybody. Okay, so let's see. It's 6, so in 15 minutes you could join Blake and the crew on the Morning Edge. Hope you enjoyed, Adam. Love talking to that guy, but I'll talk to anyone. Anyway, I'll see everyone tomorrow. Good luck today. Adios. Don't just count your pips, count your blessings.